What's going on, guys, and welcome back to another video. So one of the questions I got asked most in the comment section of my videos is how to start investing. So in today's video we're going to go through the 5 main steps you need to consider before you start investing your hard-earned cash. So the 5 main objectives you need to consider before investing your hard-earned capital is firstly picking a broker. You also need to decide how much capital you are going to start off with and your overall objectives on what you want to obtain from this investment. The other 2 factors would be how you're going to research your overall stocks, and finally what style of investing do you want to undertake. So in today's video we're going to discuss all 5 of these factors, but just before we get into that, can I please ask you, if you're new around here, to consider subscribing to the channel, as we're only 31 subscribers away from our next goal of 700. And with all that being said, let's dive right into today's video. So your first objective obviously is you need to pick a broker. Now I use 2 brokers. I use Trading212 and Degiro. They are both discount brokers, so again, if you're starting off with small capital, i.e. less than 10 to 20,000 euro, then these 2 brokers are ideal for you, because firstly they don't charge commission or fees on Trading212. That's my main broker I use, because that is definitely very effective in terms of reducing your overall expenditure if your account is small. I also have Degiro. Now Degiro is another discount broker, however there is about a 50-cent commission per trade. It's also worth noting that you are protected up to 100,000 euro on Degiro, whereas if you're not from the UK, you're only protected up to 20,000 euro, but if you are in the UK, you're protected up to 85,000 pounds on Trading212. So it's definitely 2 brokers that I would highly recommend, and 2 brokers that I currently use myself. Now, as I said, I currently use Trading212 a lot more than Degiro, again because there is no commission charge involved with Trading212. However, because I'm not living in the UK, I'm only protected up to 20,000 euro, as I said. So once this account balance goes above the 20,000 mark, I would definitely be pumping a lot more of my money into Degiro, because I'm protected up to 100,000 euro in that broker if it ever goes bust. So that's definitely reassuring, and in my own opinion you should never keep all your eggs in one basket once your capital begins to grow. On Trading212 there is an option to invite friends. So as I'm always fully transparent to this channel, if you use my referral link for Trading212, we both get a free share, so it's kind of beneficial to both parties involved. So I put the link to Trading212 referral in the comment section below if you're interested in signing up. Once you have your broker decided and set up, the next thing you will need to consider is how much capital you want to start with. Now it's highly recommended that you don't just, let's say if you have 10,000 disposable income, that you don't just lump it all in at once, because again, if you're only starting off, you need to learn the ropes and you need to kind of practice with trial and error. Another reason why I wouldn't recommend throwing all, let's say 10,000 of your capital in at once, is because you can dollar cost average. So for example, let's say you wanted to buy Coca-Cola today and you put all 10,000 euro of your hard-earned money into that stock, and over the last few days, because it has been quite volatile as well, it could easily drop 5% by tomorrow. So if I was you, I'd only start off with putting about 10 to 20% of your capital into any stocks at the very beginning of your investing journey. It's also worth noting as well that I've even found that in my own situation when I start investing, that you kind of get the FOMO, or fear of missing out, that you want to throw all your money in at the start. But believe me, patience is key in getting a long-term profitable portfolio. Next factor is one that a lot of people actually overlook or forget about, but in my own opinion it's very important, and that's to have investing objectives. So you need to have short, medium and long-term goals, in my opinion, to successfully invest in the long term, because you need to have mini goals to see what you're actually hoping to expect from your initial investment capital. Now your objectives will also tie in with your capital you have at your disposal, and other factors such as your age, your current status, so if you have any kind of people that depend on you and dependents, anything like that will affect how risky or how risk averse you can actually be in trading. So once you decide your main objectives, both short term, medium and long term, you can then go ahead and pick what style of investments you want to undertake. So for example, if you don't want to take much risk, you could easily just invest in ETFs such as the S&P 500, etc. Or if you want to invest in individual stocks, you can go for like most popular. There's dividend plays, growth, high volatility if you're looking for kind of high risk reward. Or if you don't have a lot of risk but only small uptrends, you can go for low volatility stocks. You can also look at the more speculative stocks. And once you decide what kind of stocks or ETFs you want to invest in, You also need to decide what country or what markets you need to decide on. Now with Trading 212, you can invest in the German market, everything from the UK. We can also go down below here and we can see that you can invest in the US, France, Spain, Switzerland, Netherlands, etc. as well. So once you get your objectives sorted, you need to decide what style of investing you want to undertake and what markets you want to invest into. So once you've decided on your broker, you've decided your investment capital you're starting with, and you've determined your objectives, the next thing you need to do before you actually invest is to do some research. Then you need to decide on what style of investing. So once you have all of that done and you have started your research, you need to look at both fundamental and technical analysis. Now, technical analysis would be analyzing their charts to see if they're going up and down in value over a particular period of time. And there's a lot of other metrics. Again, we won't go into today's video as this is more of a beginning style of investing. So there's a lot of different aspects that can be involved with technical analysis. And the other thing you want to have a brief look at it as well, starting off, is fundamentals. And that's why I don't recommend you investing all of your capital at once, because it's a long process of learning all fundamental and technical analysis, and it's not straightforward. So once you have your technical and fundamental analysis kind of started off, you can start investing in small portions of your capital at the start, again because you need to learn over time what best suits you and what doesn't, and that's really trial and error. For example, if you want to invest in dividend companies or if you want to invest in more speculative stocks, you will realize, especially even in my own situation, that I kind of started off at more blue chip dividend style companies such as Coca-Cola, etc. But then you kind of realize over time that if you're young and you don't have a lot of capital at risk at the start, that you can you don't even have to go to penny stocks. For example, you could also look at more kind of like Neo or Tesla companies like that. And again, there's many brilliant tools out there such as Yahoo Finance, Financial Times, CNBC, just to name a very small handful of those, in terms of companies or websites that would actually help you out in terms of doing your own research. Again, this isn't a 5-minute job. I really would recommend you, first of all, opening a practice account, which you can do on Trading 212, to invest free money at the start, no fake money, should I say. So that will help you kind of improve and hone in on your skills before you actually invest your own capital. You'd be surprised how helpful that would be by actually opening a practice account, and you'd also be quite surprised with how many people, to be honest, including myself, that didn't actually start with a practice account and dive straight in. But in my own opinion, looking back, you would actually be much better off starting with a practice account. So once you have the practice account and all the other topics done and researched, you can then decide what form of investing you want to undertake. So there's everything from day trading to swing trading. So day trading obviously is within the day or even a few hours. Swing trading is within a few days, weeks, or even a couple of months, and long-term investing would be a few months up to a couple of years. So again, I wouldn't really start off with day trading if I was you, because that can be quite volatile. I think you're better off, to be honest, starting with a long-term approach, so you won't be affected by emotions and FOMO and things like that. So I would recommend starting off with a practice account, and once you have that undertaken and you're kind of happy with your beginning investing, then you can start off long-term investing. You can also then decide if you want to short stock, which means you're betting against the price going down and you'd make money that way, or else you can go long or invest in the stock that you hope it goes up in value. And again, I'd only recommend at the start you begin to invest long, so you're only investing in stocks that go up in value, because if you short sell a stock, you can actually lose a lot of money quite fast, and it's not for the kind of beginner investor in my own. So there you have it, guys. That was just a quick video in terms of how you can start investing. We went through 5 main topics. Firstly, we went through picking a broker, how much capital you're starting off with, and what your actual short, medium, and long-term objectives are. We then discussed how important research is and opening a practice account. And finally, we discussed as well what style of investing you want to undertake. So all 5 of these factors really need to be considered for a few days at the very least before you actually start investing your hard-earned capital. If you found this video anyway interesting or entertaining, it'd be brilliant if you consider liking the video. And as always, if you're new around here, it'd be much appreciated if you consider subscribing to the channel, as we're just 31 subscribers away from our next goal of 700. Thanks very much, guys, and I'll see y'all in tomorrow's video.